Stocks continue to march their way to new all-time highs again today. We're going to break down this march and break down what this divergence means and how it changes the posture, this expectation, and what the pullbacks look like if and when they do come. At least what to expect, especially considering how bullish we are and how whether or not we are looking for a V-top to form, similar to the euphoric peaks we had in 2018. And we're going to break down too how bearish we were in 2019 going into that low point in October and why that's significant for our posture going forward with our trade idea of the day coming in a stock itself that has been relatively sideways, looking at a breakout today. So let's go ahead and get started. Today is Monday, January the 13th, 2020. This is the market outlook from marketscholars.com. My name is David Settle. Well, let's start off taking a look at the S&P 500 here with the market forecast indicator. You can see that you have another all-time high today, closing up at a new all-time 52-week high. There's your yearly high tag showing up there. You notice you got the intermediate line and the strongly in the upper reversal zone. You have the market sentiment line also strongly in the upper reversal zone. So you have a strong posture. It is obviously mature because we are now heading almost done with 3 months as we get to January the 15th. Because remember, it was October the 15th that we crossed above 50. And we started with the dark pink shading. So we're there, pretty much there. One more day and we're 3 months into this. The near-term line has been above 50 now for 1, 2, 3, 4, 5, 6, 7, 8 days. Typical 7 to 12 day run. So it's had a typical run. It didn't like really significantly get into the upper reversal zone. Here, let me make this camera a little bit so you can see me okay. Didn't quite get in the upper reversal zone. I mean, it got its toe there on the toe in the water, so to speak. And it's actually still above 80 right now, but that's not really a strong move up above, like some of these others were. And of course, the momentum line fell, but didn't get to extreme lows, bouncing back up. Not surprising on the bullish move. You can see again as we continue to move up, you got to move the Fibonacci lines up too. So that continues to push these. Fibonacci retracement. You can see now the 23% retracement is to just under 3,200, and your 38% retracement, which will most likely be if we get an intermediate pullback, we drop below the moving average, because that's pretty decently below the moving average. That will most likely bring the intermediate line down below 50. But remember, as I mentioned a couple weeks ago, especially when we were getting those clusters and we talked about this concept of this pullback, we still have maybe a week or two or more of consolidation, convergence on these moving averages. Before we even get close to a good drop below the 30 like this. Take a look at the Dow, and you can see near-term line dropping down, but still pretty bullish. Obviously not a new all-time high there. The NASDAQ did, and a lot of these technology-type stocks, there's your cluster. We are multiple months into this intermediate rally too. Same October 15th. We got a cluster at the beginning to solidify it. And now potentially one towards the end as we get more mature, similar to over here when we got right before that intermediate trend, when we were multiple months into an intermediate rally. The Russell 2000 has been more bearish. It did bounce up here today, and the near-term line bounced back up from a what would be a bullish low point there, and we obviously went back to dark green shading, with the intermediate line also turning back up. The intermediate line had been the only one to fall below 80. So, we're still on a strong trend. We're still in the period of kind of mature bullish moves that would lead us to want to pull risk off the table while still being bullish, just not being as bullish as we were over here when the dark green shading just started. So we've been multiple months in. Now we're less bullish than we were there, in anticipation of some type of dark pink, light pink to dark pink shading occurring. It just might take a while, especially considering we're that far up above the 30-day moving average. So strong trends, that we still need to ride those trends as long as they take us. mature near-term run. But even this, as we see, near-term pullbacks can be, very shallow, as you see on some of these near-term pullbacks where the near-term line just dips below 50, which would be typically bullish near-term low. In fact, you can see during this whole intermediate run, we've only had this one little dip below 20 on the near-term line. That was it. Every other dip was a strongly bullish trend, and we had that big long near-term run at the beginning of this intermediate run. Very typical of the start of a big long-term move to start off with a pretty decent near-term run. Alright, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over our logo right here on the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below this video that will notify you when these videos are posted. Hit the thumbs up icon down below the video too. That tells us two things. Number one, you liked our video today. And number two, you want us to do it again tomorrow. So it's our quick survey to see what you thought of our videos. If you like them, give us a click down there. If you don't like them, then you don't have to click anything. Also, while you're down there, comment on anything that stood out to you from our video today. Join our website at marketscholars.com. There's a link popping out right there on the top right corner of your screen. You can click on that link to subscribe to our site for free. Follow me on Twitter for more content in between these videos, and join our Market Outlook Facebook group that we've created. If you're watching this on our blog, we invite you to engage with us on social media here. Hit this little heart. It opens up this new window. You can like today's Market Outlook tweet. Click this thumbs up. It takes you to your Facebook page where you can like today's Market Outlook Facebook post. The more you engage with us on these platforms, the more likely they are to promote our content to the top of your timeline. So they promote the stuff that you engage with the most. So we try to make it really easy for you to do that. Also, check out our classes that we have. We teach 8 different trading rooms every week. Our monthly subscribers get access to all 8. So you can get access to our monthly subscription here, our Plus subscription. Get some more details on that. Also, that subscription also gives you access to our Market Outlook live videos where we go over all of our existing Market Outlook trade ideas that we've done in previous videos. We manage them all the way to the time that we close them, as well as we put on today's trade before the market closes, always at 3:30 Eastern time. And this link will take you to that class. All right, back to the charts. Let's take a look at the long-term chart and see how this week is starting out for us. Very strong bullish week, kind of overcoming that long upper shadow that we had last week, at the end of last week. Of course, the week's not over with yet, so we're only one day into it, and we'll see how if it persists. If we get another long upper shadow, it would not be a good thing. But at least we've been relatively bullish. You can see overcoming that long upper shadow on the Dow. The NASDAQ, and then Russell still giving us this sideways consolidation pattern. It's been a really good thing for our options inventory class. Our trades in the Russell have been great. So it's been a good thing for us there, but you can kind of see consolidation, and that could be a turning point. These types of transition candles can be turning points, especially the higher the PPO gets. Let's take a look at the 3 green arrow charts for the S&P 500. You can see we're back to 3 green arrows. We're up and down the MACD. That MACD, when you look at the 2-line version of that here, you can see it's right there. When the MACD it can go up to infinity, but really it only goes so high, and the moving average is also pretty high. So it makes this environment where you get lots of arrows because you're just right around it. It's easy to go up and down. And right now we're on this divergence pattern where the green line is diverging from the green, but then we'll have a convergence. And like I said, that convergence to bring both these lines down before we finally get the break below the 17, which is like that final warning sign that the intermediate trend is starting. That convergence can take a week or two, and we're still in that process. We haven't even started that convergence yet. We're still in a divergent mode where the blue line's rising instead of falling. You can see the stochastics also is rising again in the upper reversal zone above its moving average, signifying that buyers are still easily in control of the market, and that's obviously no surprise. When you're above the cloud like this and you got such a strong trend on the trend quality indicator and the trend noise balance indicator, we talked about this earlier over here. When we got above those levels, it can stay above those levels for a long time. It's hard. I had someone ask if they should short the market here before we get to the February expiration because of seasonality purposes. And the reality is it's kind of hard. It's hard to short that type of market when it's so strongly bullish. And not only that, but you have your Bollinger Bands. The market's trading way up above the value area, which is also strongly bullish. And then you look at its DMI indicator here, and you can see, we're starting to pull back a little bit. But we're not, and we've had some dark green shading for a while, which means that we are above 25 on the blue line, below 20 on the purple line, with an ADX here up above 25. So we have a strong trend here. And again, it's hard to short a strong trend. You just have to say, okay, it's very strong, it's mature. And so at that point, we just manage our risk. You can see when you have dark green shading over here because of the market forecast, but over here because of the DMI, when you have dark green shading together, that's pretty darn bullish. When you get that type of pattern. Looking at the 4-week range, you can see now the 4-week range has gone from the low is at 316. That's going to move up here after today, but after tomorrow. But we're at 316. The high is up at 328. It's a 12-point move. 16 points is the 5% range. So there's still got a few more points that we can go up and stay in that 5% range. You see, it's not too common for us to get this high above the value area on the 4-week chart. So it's pretty bullish. Pretty overbought in the short term to be that high. You can see there's very little volume support below us before we get back down here to this 323 level. So keep an eye on that and any near-term pullbacks where the blue line drops below 50. If you take a look here at today's volume, back to only 47 million. Today's range here was 2.04 points. So back down to low levels, and that's give this a second to pull up here. So you can see, obviously, the ATR is still really low. It's within 1% of the price. That when you get to 2 points, again, 1%, anything more than 1% is 3.25, over 3.25 points, and we're obviously not anywhere close to that. So volume's falling back down. So again, we're still kind of in this convergence mode where we're kind of waiting for things to grind their way. Grind their way out before we start to get more of these intermediate pullbacks, which typically will begin. You don't get intermediate pullbacks without, where's that chart? It would be right here, 6D. You don't get intermediate pullbacks typically without 1% pullbacks. Right here was the last intermediate pullback. You can see we got 1% pullbacks here. Same thing on this intermediate pullback, and the same thing on this intermediate pullback. So we're not anywhere near getting a 1% drop right now. Any drop has been very, very limited to even just right around the 0.5% mark or less. Let's take a look at the volatility chart here. And you can see the volatility is dropping. It's not dropping on a relative basis. It's only dropping here on the absolute basis and still staying relatively low. You can see the volume chart that we're getting today. We dropped throughout the day, and if you take a look at the weekly chart, we're probably going to end up with a pretty small weekly range. Remember, when we get multiple months of really small, or multiple weeks of really small ranges, you can see January, we're back to a pretty small compression on volatility of only having 4 points of range. So if we end up finishing January and with only that much range, that means February could be one where we pop back up. That average, that volatility ends up with a much bigger range the next month, similar to what you saw in November and then eventually in December with the higher volatility that we had. So to summarize, the posture remains bullish. It remains mature. It continues to grind higher, and it will continue to push higher as we move towards a convergence that takes time to develop. Markets don't fall off a cliff from all-time highs. It takes time to converge, and we're still actually in a little bit of a divergence pattern. So even if we might not go up as much, we're still probably going to avoid the steep pullback. That when I say pullback, I think a lot of people kind of expect a steep pullback, and the reality is when you're as strongly bullish as you are, a pullback to bring the intermediate line down may just bring it down below 80. to that 23% retracement, and it might take a while for something like that to develop when you have buyers so as in control as they are right now. So do you agree with that assessment? Do you disagree? There's a link popping out right there on the top right corner of your screen. Click on that link to fill out a poll. If you click disagree, comment down below on why. What are you looking at? Share with our community what you're looking at that suggests that you're either a lot more bearish than I am or that you're a lot more bullish than I am. All right, now let's take a look at what's driving this price action. And what I want to take a look at, I wanted to show you, when you look at the market forecast here, like I said, we peaked here at about May the 3rd, and then that's what started this period of volatility where the markets, we got this cluster with the market sentiment line, and from that point the market sentiment fell back in little waves, but eventually bottomed out right there. So this was actually one big period of volatility from May the 3rd to October the 8th. It doesn't look like one because we actually got, we got the higher high there and then a slightly lower high, and then we got higher lows the whole time. But when you look at this asset comparison chart, and we look at it over that same custom time frame of May the 3rd to October the 8th to that low point. These were both in 2019, so let's change that out. And then this change out to 19. Let's see, did I get that right? May the 3rd, nope, May the 3rd. You can see during that period, from the time the market peaked to the time it bottomed, the market sentiment peaked to the time the market sentiment bottomed. Small cap stocks were down almost 8%. Emerging markets were down. Developed markets, the S&P was down slightly. The dollar was up. Foreign bonds were up. Real estate was up. And look at long-term treasuries and gold, both up almost 20%. So that's pretty typical of a market sentiment pullback when you see the safety trade doing so well and the risk trade doing so poorly. So even though the S&P wasn't down very much, only less than 1%, it was very typical of a market sentiment pullback, which means, again, you go back to that 1 year time frame, which means this is the Fibonacci retracements of that market sentiment pullback. So eventually getting the highest high here in July, pulling back down to the 23%. So that's a market sentiment low point that we are just now breaking out of to a new high. This first intermediate run is the first intermediate run of a new market sentiment run, long-term run. You can see that even more clear, of course, on the Russell 2000, where the market sentiment line did drop. So from that, here's that May 3rd. It was actually May 6th when it peaked, but there's that May 3rd peak on the Russell, and then there's your October the 8th low point. So you can see the volatility that it had. And then, of course, when you look at like the Dow Jones Industrial Average, which is more of a blue chip index, there's May 3rd right there to that October 8th. So you can kind of see why, and its market sentiment just almost dipped below 50 there. You can kind of see why we've been relatively bullish because the blue chip stocks were doing very well, and then you look at the kind of tech heavy sector, and you can see it did okay too. It was slightly down during that market sentiment pullback, even though its market sentiment line actually did fall below 50 there. So when you look at just how did these assets compare today alone, so let's come over here to actually did the 13th right there, and then to the 13th, you can see that it was a day for emerging markets and U.S. stocks outperforming obviously the safe haven trades, which are long-term bonds and gold, but pretty decent bullish appetite, risk appetite for a day where crude oil is down. Crude oil has been struggling here, multiple days struggling, and it's down below its moving average. We got the dark pink shading, the short-term sentiment strongly bullish to the downside. When you look at its Bollinger Bands here, you can see that it's still got some very strong support down in this area. And then you look at its DMI, And we got the dark pink shading up there, and we got the light pink shading here because the ADX is falling below 20 or 25, and it's close to falling back below 20, even with the purple line here up above 20, and the blue line down below 20. So we don't have that purple line quite above 25, which is where we get where we say, okay, now we are bearish. And same thing with the RSI and the CCI. The RSI has got to drop below 40, and it's kind of flirting with that right now, so it's something we want to keep an eye on. And then the CCI would have to drop below negative 200, so it didn't do that here, didn't do it over here either, and we never did break that support and move to the downside. If you look at the other asset classes that did not do nearly as well as gold. Remember, gold's got not just the safe haven trade aspect going, but also the anti-dollar trade aspect. Oops. Pull up gold. So you can see it's just merely in a pullback mode right now, while the dollar itself maintains some relative. It's just kind of, again, very bearish pattern when you got light green shading and a yellow line. Now, granted, that pattern always precedes a bullish reversal, but until it does, we expect support to hold until it, or resistance to hold until it doesn't. So we would expect that bearish pattern to play out until it doesn't, until it turns into a reversal pattern. So when you look at the economic calendar that's coming up, the big news comes out here tomorrow, and that's the CPI. CPI and PPI for the next couple of days. Empire State Manufacturing will be looked at closely, as long as the Philly Fed that starts the cycle, and those ISMs that culminates with the national ISM. You also have the housing market index and import and export prices. So lots of inflation data, lots of housing data, industrial production also at the end of the week. So it should be a busy week to see what's going on with this economic surprise index and see if we continue to get it positive. Yields typically follow that higher, and right now yields have been kind of stuck. Whoops. Yields have been kind of stuck in the sideways action, is waiting for a breakout move one way or the other. You look at the Bollinger Bands here, and the bandwidth is really low. We've consolidated. We need to break out one way or the other. If you look at the trend quality on this, as bullish as the market's been, the stock market's been, there's been a very, very weak bullish trend going on with the 10-year note, and not really even to extend away from that Ichimoku cloud at all. All right, if I do the same thing here on this chart and look at the sectors during that same time frame of May the 3rd, when we peaked of last year. Whoops. So it would be May the 3rd of last year to October the 8th when we hit that low point, October the 8th of 19. And again, you can see, look at the safe haven areas. They were up 5 to 10% while the market was down slightly. And you had energy down, which is not surprising with crude oil being down, but you have industrials and financials and healthcare and materials and communication services all lagging, falling down a few percentage points. So again, very typical to see safe. I mean, the risk trade wasn't sold off very much, but the safety trade was so overbought and so pushed up during that time frame that we're coming off that low and starting a new long-term run. If you go back to that May 3rd peak, and you go December, the Christmas Eve on the 17th, all the way to that May 3rd peak of last year, before when the market peaked, again you can see that we were only up a few percentage points there, coming off of that low point. We had kind of the S&P 500 was down a couple percentage points at that level as well. Sorry, this is actually the performance going into that May 3rd peak. So look how strong technology was coming off that Christmas Eve low. Discretionary communication services, financials, industrials, all very bullish. We're not quite there at that point where we're this extreme on the bullishness going into what we see right now coming off of the October 8th low. But I mean, we're strongly bullish. There's some good moves in here. But here, let's just move this to today. But when you look at some of the numbers, we're getting up to 30% there. But look at the safe haven area still up there. They still got a lot of overbought condition to unwind before, and some of these other areas like financials and industrials are still lagging behind. This is actually a 1-year chart here. Let's do. This is actually 2019, and hit OK. And there we go. You can see. There's financial, there's industrials lagging, there's communication services really lagging, materials and energy lagging, and then there's your safe havens, and not really down very much off of that low point, which means that big safety trade addition, or people being so long that safety trade haven't started to unwind those safety levels yet to the point where they can start to lift a lot of these other cyclical areas, and not just right now technology, which is Apple, which is leading the market higher right now. Alright, so one stock in that industrial space has not been participating. This industrial sector has been kind of up, it's kind of started up a little bit and slowed down. But you can see a little bit of a breakout pattern after getting, a new intermediate posture, higher low point, higher lows altogether on these intermediate lows, and slightly higher intermediate highs. But we were kind of sideways here. We got this cluster, which is a very good sign at the beginning of the intermediate run, and now we're breaking out. You can see that what that breakout pattern looks like here on the MACD. It's starting to cause the MACD itself to move to higher levels, and with buyers in control. You can see from a Bollinger Band perspective, this little breakout has gotten us up above the volume node into this volume gap area, which path of least resistance now to the upside. You look at the DMI for you got to move up above 25 here on the positive directional index, and the move already being below 20 on the negative means now you got an ADX opportunity for the ADX to make a run up above 20 and 25, similar to this, and start its own new rally. If I look at its Ichimoku cloud and trend strength indicator, you see that we're above the cloud, well above the cloud now. There's that breakout pattern. You can see also too that we are now approaching moderate strength trends, and getting above, getting to the strong strength trend is what will really establish this trend. So what we're going to look at for is looking to do a long call, a trend trade long call, and ride this from a trend trading standpoint. Its long-term charts are still, we got all these clusters, and it looks like we're trying to break out here, and you've got dark, green shading because you got the golden cross environment, and the PPO is really low. So lots of opportunity for a trend to develop out of any kind of breakout that we may be getting here. So with that being said, we looked at buying the at the money long call with a 50% stop order like normal, and we position size smaller because of the earnings, but because it's a trend trade and not a swing trade, we have time to help offset any earnings negative reactions, unlike on the swing trade where we don't have a lot of time and things can move really quickly. So in that case, I went to a 3/4 point, 3/4 of a position instead of the half, because I do have time afterwards. If it does make a move I don't like and I lose half, I've got time to let that to trend trade it if it doesn't break the trend, which most likely wouldn't if we got that type of move, considering how bullish this little breakout has been. Okay, and that does it for today. As always, thank you all very much for watching. You've heard from me now. Now I want to hear from you. Use that link to go to our forums on MarketScholars.com, specifically to our Market Outlook forum. Open up any new thread you want there with any questions or comments you have about what we discussed in today's video. You can also reply to anybody else's thread too. It's meant to be a conversation for all of our community, not just a dialogue between me and any of you. Remember to hit that thumbs up icon down below. Click the subscribe to our YouTube channel, and then comment on our video. Follow me on Twitter for more content in between the videos, and join our community at MarketScholars.com, as well as our Facebook group for our Market Outlook video. Have a great rest of your evening, everybody, and we'll see you all tomorrow.